On Sunday, July 18th, Zoom announced to buy cloud-based contact center software provider, Five9 Inc. for $14.7 billion. How will this acquisition benefit Zoom's future growth and synergy effects that Zoom could get from the acquisition? How important is Five9 to Zoom's business? Zoom had expanded revenue by almost 400% in 2020, as businesses, schools, and socializing are shifted to online due to the coronavirus crisis. At its peak, Zoom stock was at $599 on October 16, 2020. However, it has down 35% from its all-time highs, now trading between $300 to $360. Investors are uncertain about Zoom's stock future. As the economy reopens, more workers are starting to go back to the office, school reopens, and rapid vaccination efforts. The sight of the coronavirus crisis eases raises doubts if Zoom could retaining small businesses as well as corporate accounts. Analysts are skeptical of the sustainability of Zoom's growth, especially with rivals Microsoft, Cisco, and Google are taking the market shares from Zoom. Microsoft Corporation unveiled design changes to its Teams platform in order to improve remote workers' interactions in meetings. Alphabet Inc.'s Google has revealed updates to its Workspace productivity suite, including new tools for its Meet video conferencing system. The recent announcement by Apple to open up its FaceTime to outside the Apple ecosystem creates concerns for Zoom's investors. The CNBC Jim Cramer once said that Zoom is a one-product company. Hence, the potential of the company's growth is very uncertain. In fact, Zoom is not just a web conferencing app, it is a cloud-based software service. It has the flexibility to enhance its product services. In 2019 it has launched Zoom Phone, a cloud phone system designed for users who would like to set up quick calls without video. Subsequently, it has also launched Zoom Rooms, a virtual marketplace Zoom apps, and on Zoom. Zoom's hardware-as-a-service products allowed companies to replace legacy systems by consolidating software and hardware for one consistent experience. Zoom recently launched virtual receptionists and is working with financial services customers to launch virtual tellers and virtual wealth managers that will use advanced technologies like AI to recognize nonverbal cues to better engage with customers. Zoom reported first-quarter revenue that topped analyst estimates, though growth slowed again from the previous quarter. April quarter earnings jumped 560% to $1.32 a share on an adjusted basis from a year earlier. Revenue soared 191% to $956.2 million from a year earlier and rose 8.3% from the January quarter. Zoom's earnings were driven by the surge in new customers, and the company now has 497,000 customers with more than 10 employees on its books, an 87% jump from the same period last year. As a post-pandemic work environment that is largely hybrid, hence the demand for video conferencing software is expected to remain. The recent surge of Delta variant in the US and across the globe will slow down the economy's reopens. Businesses' online meetings will still stay for quite a while as workers remain work from home. Zoom's recent move to acquire the cloud-based contact center software provider, Five9 Inc., is aimed to boost its presence beyond video chat that will benefit its Zoom Phone. Zoom Phone is a modern, cloud phone system that offers a digital alternative to traditional phone systems. It also enables organizations to connect and interact in new and convenient ways. Five9 is a pioneer of cloud-based contact center software. Its product is highly scalable. Secure cloud contact center and easy-to-use applications allow its users to manage and optimize their customer interactions across many different channels. Five9 helps its customers to manage all their omni-channel customer interactions, including voice, SMS, chat, email, social, video, and more. Five9 products enable their customers to use advanced analytics to measure interaction outcomes to ensure their contact centers are performing at a high level. The Five9 Intelligent Cloud Contact Center provides digital engagement, analytics, workflow automation, workforce optimization, and practical AI to help customers reimagine their customer experience. Five9 exceptional double-digit growth over the last 12 months as it expanded its global footprint and pushed further into conversational AI. Five9 also integrated with Salesforce, which enables the company to offer CRM integrations with Microsoft, Oracle, Zendesk, Customer, and ServiceNow. Five9's white glove implementation service continues to help it win new and retain existing customers, and grow its partner ecosystem. Five9's first quarter of 2021 revenue increased 45% to a record $137.9 million, compared to $95.1 million for the first quarter of 2020. The acquisition of Five9 is expected to accelerate Zoom's long-term growth opportunity by adding the $24 billion contact center market. Zoom revenue for the fiscal year of 2022 is estimated to be near $4 billion, up from fiscal 2021 revenue of about $2.7 billion. According to Valuates, which offers market research, reports the global web conferencing market is expected to grow from $12.58 billion in 2020 to $19.02 billion by 2025, at a CAGR of 8.6%. The video communications market is expected to grow an average of 8% per year to nearly $20 billion by 2023, with another report expecting that the industry will register a CAGR of 9.2% from 2018 to 2025. Analysts recently reported that spending on cloud infrastructure in the United States grew 29% in the first quarter of 2021, hitting a record high of $18.6 billion. Global spending on cloud infrastructure reached $15.1 billion in the first quarter. Spending on the cloud for computing and storage infrastructure products jumped 12.5% on a year-over-year basis. More and more businesses are shifting data and information to technological and digital platforms to safely remain afloat, benefiting the cloud business. As Zoom and Five9 are cloud-based software providers, Zoom has the flexibility to enhance its product services further. With Five9 already way ahead of cloud-based AI, the potential to grow its services will be huge. The emergence and evolution of artificial intelligence and automation technologies in the call center have made an enormous impact on the customer service experience. As companies are spending big on chatbots for customer service on their website and social media, with today's intelligent virtual agents, which can interact with customers more naturally and accurately over voice, social media, and messaging channels. Intelligent virtual agents, an AI-enabled omnichannel self-service solution, is going to play a major role in the future of customer service as they provide an outstanding service experience while automating activities that previously required the attention of live agents. Customers are engaging with brands more frequently across more touchpoints, and they've started to expect a seamless experience along the way. Five9's intelligent virtual agents, IVAs, will bring more revenue growth for Zoom. Five9 enables Zoom access to artificial intelligence tools for analyzing data from a contact center. This is important for future business growth as organizations are rethinking their plans for digital technologies to include video, voice, and team collaboration tools, as flexible or hybrid work models will be the future norm. Companies around the world increasingly bundling video and collaboration solutions on the cloud to accommodate the change in work culture. Zoom's stock dropped 2.15% and closed at $354.20 on Monday, July 19, as some analysts thought the deal was too expensive by paying 13% premium to attempt to grow Zoom phone business when it could not achieve on its own. Analysts criticized that Zoom is paying a high price for a non-differentiated market. M&A always has its risks, however, businesses need to take risks to enable the business to grow fast and meeting investors' high expectations. The deal is definitely a risk that must be taken by Zoom to grow its business to the next level and increase its competitive ability. Zoom is moving in the right direction and will be able to deliver higher than analysts and investors' expectations. This is not financial advice. If you would like to make any investment, please do your own due diligence. Hope you enjoy watching the video. Appreciate it if you could like the video and subscribe to the channel. This will help us a lot to grow the channel. Thank you for your support and see you again in the next video.